for them. We've got Yatharth Tyagi, the whole-time director at Yatharth Hospitals, joining in on the show right now. Yatharth, great to have you on ET now. Thanks for your time and congratulations on this acquisition of Shantived. Tell me, what was the strategic rationale behind choosing Agra as your next growth market?
Hi, good morning. So we feel Agra has a great potential as a hospital market. It has around 2.4 million population. So if you look at it, it's even more populated than the cities of Noida, Gurgaon, and it is still lacking fully corporate-run hospital. So we feel that the sheer maths on this acquisition made great sense for us. Agra has great connectivity to our NCR hospitals. There's a Delhi-Agra highway, there's Yamuna Expressway. So we already have a good patient base who are coming from Agra to our NCR hospitals. We are a well-established and known brand within the Uttar Pradesh market. So we feel when we went to the Shantived Hospital in Agra, we saw the property, we really liked the infrastructure. We felt it is one of the best infrastructures of the cities. Also the doctor family who are running that hospital, the Prakash family, they are very well known, renowned family of Agra. So we feel that, we can really do well for this hospital. We can increase up the occupancies, we can ramp up the revenues in the coming times ahead. And Agra, we feel is a great market for us to be in.
All right. Hi, Yatharth. Morning. This is Shrishti also joining in. Firstly, congratulations on the acquisition. But if you look at the internals, the acquired hospital is running at a 35% occupancy right now. What's your occupancy target in the first year of the integration, and what specific levers will you use? It could be doctor onboarding, specialty outreach, etc. To achieve that, give us some more sense on this.
We feel that by financial year 27, the occupancy for this hospital can easily upwards of 60-65%. And, it's a 250-bedded hospital. The occupancy can even fully be optimized after that to the levels of 90%, because there's a lot of super specialties that has a great scope that the hospital is not fully currently doing. We would be adding those super specialties, as well as the development of the critical care services. We feel that, the city of Agra, when it comes to the development of ICUs, when it comes to critical care capacity, that would be a huge focus when we are looking to ramp up this occupancy. Also, there are certain government schemes that the hospital has just recently empaneled with. It was only working on private insurance and cash patients. Right now, it was contributing close to 75% of their revenue. Certain government schemes have just been empaneled over the last 6-7 months. So also, the occupancy will ramp up due to those schemes in the coming quarters as well.
Right, and Yatharth, like you were just mentioning, the capacity of 250 beds for Shantived. Now, that's the capacity expandable. What's the timeline for this expansion, and what would the Capex requirement be, and what would the funding look like?
So for the 250-bedded capacity, there is no more requirement for the Capex. When we say that they were operating 150 beds, however, the hospital has already a well-developed capacity of 250 beds. Just, a few bed addition here and there are required. In fact, there's further more scope for after 250 beds to increase the capacity of this hospital. There's a land parcel just behind this hospital. If we test the market, if we feel the market's quite good in the coming ahead, we would surely be even looking to take up this 250 bed capacity to even 400 beds in the coming times ahead. However, for the 250 beds, no more Capex is required.
All right, but along with that, help us with the financial growth outlook as well, because 50 crores was the top line for FY25. What's the expected revenue run rate post the integration? Because you just said that from 35, maybe in the next couple of years, the occupancy can double from these levels. But what about the revenue growth trajectory?
So we feel, when we were looking to acquire the hospital, we did our maths, and we feel that the revenues can even triple, in the next 3-4 years. We wouldn't be surprised by that, because the sheer potential the city of Agra has, with highly densely populated areas, still lacking a fully developed corporate hospitals. A lot of the patients still travel from Agra to NCR, given the right, services. In fact, we are even putting up the Agra's first robotic department in this hospital. We are putting up Agra's first Da Vinci surgical robot. We are also putting up orthopedic robots in this hospital. So we definitely feel that the revenue potential can even, triple in next 3-4 years of time.
Interesting. Yatharth, tell me about your overall occupancy across your network, because from what I see in the first quarter, it's improved to about almost 65%. What's the guidance for the full year, ending that is, of FY26 and even the visibility on FY27?
See, we are constantly adding beds. We are, adding greenfield expansions. We are doing brownfield, and now with this latest acquisition. So I think the right look at our occupancy, if we talk about our existing beds right now, which is around 60-65%, should be, close to 70% on the existing beds, by the end of this financial year. Right now we have around 2,500 beds. We are still constantly looking to increase our bed counts as well. Each year we have acquired one asset. We have acquired few assets last year. This year we have acquired Agra assets. In the coming years also, along with the brownfield expansion that is already being planned. So there's a huge capacity expansion that we are targeting, close to even doubling a bed capacity from now in next 3.5 years ahead.
Okay, so that's the take on your overall guidance in terms of your occupancy. But if you talk about your RPOB, that has steadily risen from 30,500 to 32,400. How much more headroom are you seeing for this metric, the expansion here? And what will drive it? Or what could be the case mix or super specialties pricing? Anything if you could help us on that front.
See, ARPOB for us has a biggest leverage for growth in the coming years. If you look at it, our ARPOB is still on the lower side compared to other industry peers. Some of them who are operating at a larger bed scale, at a larger size. That is because there were certain super specialty treatments that we were not doing earlier, like oncology, like the transplant program, as well as, payer segment of international patients. All these have recently started. So that's why the ARPOB growth is there. We feel that ARPOB growth for 10% yearly in next 3 to 4 years is easily possible. In fact, if you look at our newer hospitals, like the hospital in Noida Extension, which is having a fully developed oncology unit, ARPOB there is close to rupees 40,000. And this ARPOB in the Noida Extension Hospital, as well as our Great Noida Hospital, can even be touching, close to 45,000 rupees in the years ahead. For the group level, as I said, 10% yearly growth in terms of the ARPOB due to increase in our super specialty business and changes in the case mix. As we are reducing government business, ARPOB is also bound to increase because of that in the years ahead.
Right. And update us on the Faridabad acquisition as well. It's a 400-bed facility operational from August, as we understand, of this year. How will this really change your regional market share within NCR?
Faridabad is a tried and tested market for us. 2 years ago, we started a 200-bedded hospital on the other side of the Faridabad, which is known as the Greater Faridabad. That hospital has already broken even at even PAT level after 15 to 16 months. So we felt that if we add one more hospital of 400 bed on the other side of the town, which would be having oncology and transplant, something that we were not doing in the smaller Faridabad hospital, it would be good for the group, and it would be easier for us also to leverage the brand for the Faridabad region. Now, with these two hospitals, we are the biggest hospital bed capacity in Faridabad, and with the 400-bedded hospital starting from August, this would be on the similar lines of what we have done in the Greater Faridabad. So, similar occupancy, similar break-even levels are expected from the 400-bedded group hospital in Faridabad also.
Appreciate you joining us and chatting with us so candidly about your growth outlook. Thanks once again for your time. Good speaking to you. Okay, then let's move away from the world of equities to the primary market right now. You have 3 D Street